do a video update for the markets this week. Let's start with TLT. This is kind of what I feared. Um, Sorry I didn't put on a small position here, but this is a weekly chart. Um, Always short a parabolic move, and right about here went parabolic. This is no support, straight up, and what's happened, we've reversed. That was really to be expected. Raising rates are very bad for the economy, and that will continue if this chart moves as it's moving now, straight up and straight down. Um, this number really needs to come down to 120. This is where I see some kind of support, 119, 120. This blew off to 138, and I talked about shorting it, and others told me people shorting bonds got their heads blown off, so don't even think about it. And guess what? Um, Moving on, the dollar. The dollar looks a little toppy here. This is a bad looking candlestick. Right, couple of them here. Let's see if we can get some volume. Probably not. Yeah. This candle was okay. This was not so good. And then this candle looked like we were going to break up and out, and we didn't. We're actually making a lower high here. So we have some decent support right around the 93 level. So I expect this to go sideways for a little while as people kind of try to figure out what's going on in the world currency markets. I don't expect the dollar to continue its strength simply because this has been a tremendous move. And people usually start talking about the move when it's done. And this is what's happened, right? Big move. People started to notice, came in. Then 1, 2, 3 pushes up. This is the end. To me, this looks like the end. It looked fine here. It went sideways, stayed above the cloud, stayed above the baseline. Mingled with the baseline back here, but really held it just fine. Same thing again here. If we lose the baseline and test the cloud, that's going to give this really a different type of feel. That's really going to give this a nervous type of look as far as the top goes. Check the volume on this before making any decisions, but the currency markets are a nasty place to be these days. We get a decent uptrend, say along these lines, so we could come down and test this uptrend. But this is up in the clouds, so we got to come down from space here. One other thing I want to point out that I read online that was a wonderful article was talking about the S&P 500 12-month moving average. This is a monthly capture of the S&P. The blue line is a 12-month, and as you can see, we've mingled with the 12-month. But when we lose it and it serves as resistance, we get hammered. We can really sell off. We mingled with it here, but rose above it. This was a scary time, but again, we came back. December time is a bad time to be shorting stocks. Again, had a nasty scare here in May, but it did not lose the 12-month on a monthly closing basis. Okay, this has to happen on a closing basis. We lost it here, but closed above it, so it doesn't matter. Watch this line moving forward. If we lose this and it starts to act as resistance, that is your first major warning sign. Now on to gold. Gold has acted relatively well this week. We held the 20-week. This is real gold here, not paper gold. We've held the 20-week. The MACD, this is a pretty big move off the top, 1307. Big reversal down, almost 100 points. The low here was, during the day at least, I believe, was 1216. And the MACD really didn't take a nasty turn down. It didn't sharply move down as hard as the price action did. It just kind of went sideways. It went down slightly, taking a breather, but it did not really radically move down. And I have another indicator here. If I can open it up, there we go. The Stotch is really what did move down, which is to be expected because it was wildly overbought. I mean, it's up here at 92. 92 is time to sell. I mean, look at other times the Stotch has gotten that high, and it's a bad sign. You always want to check both the slow and the fast Stotch. Let's just check the other one real quick. Same general look. So this is going to come down a bit. One more week, maybe two next week, maybe the week after. This can continue. Gold actually held last week's low. That's why I went long this week. Last week's low was 1228, and the last price today was 1229. So we actually held last week's low. We can break that. We can have one more flush down, but we've held the 20 week on a closing basis. We bounced off it. As long as we start to move up next week and do not flush, gold looks good to continue its uptrend. I talked about a higher low somewhere over here on the charts to match up with this one. We have kind of an angled head and shoulder formation, and when you get an angled head and shoulder formation like this, we got a shoulder, head, shoulder, neckline. This would be the bottom of the shoulder. This is the first one right here. The second one would be higher than this one. And this is at 1195. And what's this one at? It's forming around 1220, 1230. Gee, what do you know? That just about makes sense alignment-wise. We can drop all the way down to the 1200 area. I really need to see the 1200 area, 1207, 1211. That really needs to hold on a closing weekly basis. On a monthly basis, things look a little better here. You can see we had a monster move higher, and we've come down. This month has not closed yet, so I wouldn't be surprised if we ended February right around 1230, 1240. Gave back about half this candle, which is, again, not unusual. And then from there, in March, maybe had another inside month. And then in April, started to see a new high. I expect a new high by April. We can have 2 inside months here. But if that happens, I would expect May to be extremely explosive. Okay? I bought just barely out of the money calls for April. So I'm looking for at least a retest of the highs by April, mid-April. But I think by the end of March, you're going to see gold start to move up again, 1260, 1270, and you'll see some action in the call options being bought. Looking at paper gold, we could be seeing a little inverted head and shoulder here. We got the Stotch, daily Stotch is curling up. Another reason to buy. It's in kind of oversold territory down here where it's seen bounces before. That's a good sign. This has been pretty regular, with the exception of this chop up here. This has been pretty steady. Up and down, nice and smooth. That's kind of what you want to see when you're playing trends. You don't want to see this. This is no trend here. There's no trade here. No trade at all. It's chopping. It's all over the place. When it came down and bent up and price followed, this was a decent place to buy. And then you had a little, this is when it really got going. Actually made a higher high here on the Stotch, and the price really blasted off. But I expect to see this start to turn up. This could be very slow. This could be another cup. Okay, this looks like a little inverted head and shoulders again. Right shoulder, head. Come up and make another shoulder right here and push us up, back up to 122. We're pretty deep and the cloud's pretty high. If you believe in the Ichimoku cloud indicator, this is telling you that fundamentally this asset is oversold. The cloud is above the current price action. Get rid of the Bollinger Bands here. And some of our trend lines. So you can see this a little more clearly. It looks like spaghetti soup, this chart. Real price action, let's say it's the 200-day. That's up at 120. This is the 200-day on GLD, not real gold. I tend to ignore the GLD indicators because they're so wild and choppy, and there's no real trend to discover there. So moving averages really don't do you a whole lot of good. If we want to go look at the moving, there's still a falling MACD with this. It's the one thing that I don't like. The Stotch is looking healthier. But if you look at the indicators on XAU itself, the MACD needs to correct, but the 200-day is at 1245. Gold got overbought. It was due to correct. Everybody, if you follow some serious commodities brokers, professional commodities brokers that sell options or buy options, especially the ones that sell options, they were expecting a lot in the commodity space were expecting a correction in gold in February, and we got it. This is just a correction so far. There's no reason to think this is a massive sell-off. That said, it doesn't mean we're going straight back up again. We can come up to the 20-day or the 200-day and come back, come down into the cloud, and then try to rally again. Fundamentals are on your side here with gold. The world is extremely liquid, and I think you're going to hear the Federal Reserve Board say that they're not going to raise rates until September. That would very much give gold a big boost. If you can see this or not, I see a declining bullish wedge. Price is going to tighten in this declining wedge and then burst out. That's possible. It's not necessary. We held the 100-day here, which has proven to be support in the past. Get rid of the cloud. Mingled with the 100-day here, came up and grabbed it again and rocketed off. If this held support again at the 100-day, that would be very pretty, technically speaking. We're trapped between the 100-day and the 200-day, and actually the 50's in there too. What you want to see if you're a bull is you want to see the 50 continue to climb, and right now I believe the 50 is rising, ever so gently, but it is rising. If the 50 continues to rise and crosses the 200-day moving average, that is extremely bullish. That is what you want to see if you're a bull. You also want to see the MACD curl and start to move up here. If you buy calls, you want at least April. I really tortured myself with buying May calls. And if my calls start to do well, I will roll them up and out. There's no reason to bet near term. I don't know why anyone would bet near term here. This could be this was a little bear flag that broke down. This could be another little bear flag that breaks down and tests 1207, 1211. If you buy calls, you can ride that out. If you look at the 4-hour, there is a divergence. If it's going to play out, I really don't know. If it makes sense, makes a difference, I really don't know. But the MACD here hit negative 902, and here it hit negative 8.3. And while price trended down, the MACD was trending higher. So we do have a divergence. You may see it on the 2-hour as well, I don't know. But price was grinding higher all day today, just wouldn't go away. I wouldn't be surprised to see this come up Sunday night, hit 1245 or 1240 or 1230 or whatever, pull back down again and make that other shoulder. Got one here and make another similar one right over here. And then you have shoulder, head, shoulder, and liftoff. I don't see that happening this month, but I think late this month, early next, mid-March. Remember, the ECB buying program starts in March. India is talking about loosening restrictions on allowing their residents to purchase gold, and the Indians love gold. So there's a lot of tailwinds for gold this year, a lot of tailwinds. So don't get too caught up in nasty down days like this. Don't get shaken out of your positions. Buy plenty of time on your call options and sit back and wait patiently. This is really going to be the year, I think, that patient gold buyers are paid. In previous years, Last year, um, gold was flat. The year before, it was down pretty bad. But gold has a lot going for it, and there's still not a lot of bulls in gold. The S&P is doing very well. Let's go have a look at the S&P. I warned not to short the S&P. I mentioned that the MACD could come down really low here and then come up and make a lower high on this downward divergence. And at the same time, price could diverge and move higher. And that's exactly what we got. We got a nasty down week here. And then guess what? It turned around and moved higher. The bulls remain in control. The macro picture in the economy is still okay. All right, macro is not breaking down. And they claim Greece is under control and they're making progress. That's really just for the news. That's really to just keep the news people at bay and just have good news to report. They're just looking for anything to twist as good news to report. That's all that is. Greece is screwed. Their debt is way too large. People have stopped paying taxes. The voters are more extreme than the legislators. And the voters in Greece have voted, are voting with their wallets. They are finding every excuse they can not to pay taxes. They think they're planning to default. They're planning to screw the ECB or at least squeeze them until it hurts. The ECB, in turn, is cutting liquidity to Greek banks, which are on the verge of failing. So, meanwhile, a lot of wealthy Greeks are buying gold. So, that's not a recipe for success for the bankers in Greece. What's going on in Greece is that people are preparing for their exit from the ECB, from the EU, away from Europe. That's what's happening. Remember, accidents just don't happen. Okay, when Greece does leave the EU, people are going to say it's a shocker and no one saw it coming. That's a lie. All right, there were plenty of signs showing it was coming way in advance. All right, when people stop paying taxes and they elect radical parties like the Syriza party that tells the Greeks, we're going to screw the Europeans, the hell with this, we're tired of being taken advantage of. Whether the Syriza party follows through on their promises or not really doesn't matter if people have stopped paying taxes. They won't have the money to pay back the Europeans with. What are they going to pay Germany back with? What are they going to pay the ECB back with if people aren't paying taxes, right? They need people to pay as much taxes as they ever have or more. And people have already stopped doing that. So that's a really bad sign for stock bulls because credit is going to tighten. When Greece leaves later this year, credit will tighten, or next year, but I think it'll be this year. And when that credit tightens, and it's already begun, if you've looked at TLT, this is awful looking. This is saying to me a top is in. We are going to finish February, it looks like, with this super bad inside candle. If this finishes as an outside down candle, that's real trouble. You could see a bounce, and it too will be sold. And this is going to come way down. Credit will tighten, and the economy will start to suffer from tightening credit conditions, at which point I expect the Fed will promise not to raise rates until September or later, and they very well may never raise rates ever again. Some people believe they will never raise rates. If we get into June and July and the Fed doesn't convincingly, if the Fed delays till June or July, and June or July comes and the Fed says, don't worry, we're pushing it back to September, you will have a stock market crash in August. In August, people will be saying you need to delay the rate rise again because Greece is about to leave the EU. You must leave rates alone. You must continue printing. If the Fed does not say we're pushing it back again, and by the way, we may cancel that idea to raise rates entirely. If they don't say that, expect the bond market and the stock market to really get hammered, especially equities. Anything out on the risk curve, equities, high yield bonds, they will get pummeled, and gold will soar. Right now, government bonds are paying a negative interest rate. Many of the government bonds around the world are paying a negative interest rate, which means you have to pay the government to hang on to your money. If you buy gold outright and store it yourself, you don't have to pay anything. This is actually a less expensive store of wealth than government bonds. When government bonds are paying you 6%, why would you own gold? It doesn't pay you anything. All right. But when government bonds are paying you -1, -0.2, -0.5, whatever, well, why do you want to own a government bond if you can just hide out in gold? Hide out in gold if there's price stability and gold is roughly maintaining its current value. Why not just hide out in gold? In fact, the price of gold may go up and you may make money. People are starting to do that kind of math. And don't be surprised if gold catches a bid. Gold will go sideways for a while, and don't be surprised if gold's up 2.5% one day and just keeps rising. It had a huge, huge January. And there's going to be another month like January or close to it. Okay? January was from 1167 to 1307. So you went, what is that? My math is awful. 140 points. I went up $140. There's going to be another month where gold is hanging on to about half of its gains right now. So if it goes up another $140 from here, it's at 1370. Another $130 from there, and it's at 1500. So it's going to chop around on the way up, but it's chopping up. I'm looking to close my calls sometime in late March or early April, and when I do, I will most likely roll out to July. I'll buy myself another 3 months because time in the option market is cheap. Let's go look at a few individual names. Facebook chopping around, going nowhere. IBB made a comeback like I said it might. The MACD is curling here. That's a great look if you're bullish on biotech. This was a nasty shakeout, but it was just a shakeout. We popped right back up. Looked like we were going to break down again, and didn't matter. We're just mingling with the baseline here. This is not a nasty breakdown. And sure enough, they turned it around and popped us up. Okay, so biotech is still intact. Do not run away from biotech. The VIX has broken down. That's wonderful if you're a bear. If you're a bear, this could get even lower. I'd expect it to pause right around the 14 mark and maybe pop again. But it can go lower. VIX is a screaming buy pretty much from here down. You'd have to buy, I'd go out quite a ways. I'd buy May or June. I want to make sure I have plenty of time on my VIX, but the VIX will pop again, there's no doubt. Greece is in tattered shreds, as is the rest of Europe, and that'll probably come to a conclusion this year. IWM looks fantastic if you're a bull. Volume is light. That's the one troubling sign. Volume is not so great. The RSI is at 50. The MACD's got a beautiful rising angle to it. As I said, I am long equities and retirement accounts, but I do not like them long term this year. I know a lot of people who say the same thing as me, by the way. They are professional investors who are long equities in size, but they are not that bullish for this year. They are looking to lighten up into strength. I will follow the S&P probably to the top of the weekly Bollinger Band, which right now is about 2134. I wouldn't be surprised if that hit 2150. I think fair value right now is about 2085. I know some people that are shorting anything above 2085. So we may dip a little bit here, flag out, and then in March make one more push higher for 2150. And then from there, I expect us to to put it on top for the year at some point, right around there. Let's go check out silver real quick. XAG. This is not paper silver. This is actual silver. Silver had a great day today. Silver was up 2% and change. This is basically the same look as gold. Um, broke down, fake breakdown, huge tail here, huge follow through. That's what you want to see if you're a bull. Came up, basically put an inverse head and shoulders here, shoulder, head, shoulder, blasted out, digested that move. We really had a tight range right in here. And blasted out of it. Um, this was below the cloud. It's bursting up to catch up with the cloud. This is good news for gold as well. And while we're talking about that, let's have a look at GDX. We got to wrap up this video here real quick. GDX is a 10-minute chart. Why does it default to a 10-minute chart? Still working on this pendant. Pretty little pendant here. They're dragging it out quite a bit, I have to say. But not a bad day for GDX. Even more speculative is GDXJ. Junior gold miners. They had a halfway decent day, up 1.4%. Again, trapped in this pendant, but acting well. Gold miners are attractive here because the energy costs have come down so much. And as long as the price of gold holds up, they will be a attractive place to be because it's a lot easier for them to mine and sell gold for a big profit. Let's just have a look at volume. Yeah, volume's been kind of light the past few days. And just for the heck of it, let's check out the MACD. This is what you want to see if you're a bull. It's curling. It's curling up a bit. Not much, but it is. Got down to right around zero. You don't want to see the MACD go negative if you can help it. So this could scrape along zero and then curl up again for March. I would not be surprised to see that. So still a lot of value in the miners, a lot of value in gold and silver. Sell out of the money puts or go long call options. The call options in gold are still very expensive. But again, that's because gold had that 1 month where it was absolutely insane to the upside. We go to the monthly here. January, call buyers, were they patient from December, where no one wanted gold? We held the low and boom. I mean, if you bought, at the money calls, they were worth $13 by the time the month was done, at the highs. So we're going to have an inside month here. We could have one more inside month in March, but I expect this will continue to rise. Okay.